Hi, this is Lara at Elliott Wave Stock Market with your end of the week video analysis for the S&P 500 for the trading week ending Friday 11th of May. We've got a new all-time high this week from both the AD line and on balance volume. That's extremely bullish and gives me reasonable confidence in the Elliott Wave count, and it's the reason why I'm having to discard those alternate, rather bearish wave counts. With on-balance volume and AD line both making new all-time highs, it looks very likely that price will follow, so the wave count should be bullish. That has support from a classic analysis. A short-term target for Elliott Wave is 2744. Short-term classic analysis target using a measuring gap is 2811. About one of those points we'll be looking for a short-term, relatively brief pullback or consolidation. The mid to long-term target is 2922 from Elliott Wave and classic analysis 3045, both using triangles. Elliott Wave triangles and classic analysis triangles are a bit different. Elliott Wave count first, classic analysis last. Cycle wave 4 within supercycle 5 ends here, and this is where a cycle degree fifth wave begins, and when it's complete at the weekly chart level it should look like a pretty obvious 5-wave structure. Well, most likely it'll look like an obvious 5-wave structure. So far within it we have primary 1, 2 and primary 3 incomplete. Primary 3 may only subdivide as an impulse. We may have 1, 2 as a double zigzag lasting 11 weeks and deep, 3 with no Fibonacci ratio to 1, 4 a shallow triangle and lasting 14 weeks, and now the early stages of intermediate wave 5 to end primary 3. When primary 3 is complete, I'll then be expecting another big multi-week, multi-month correction for primary wave 4 to be a counterpart to this primary wave 2. It's the proportion between second and fourth waves within an impulse that give the impulse what we call the right look. Here we've got nice proportion between intermediate 2 at 11 weeks and intermediate 4 at 14 weeks. They both show up at the monthly chart level. There's perfect alternation as well, and so this part of the wave count has the right look. With the AD line now making new all-time highs, I expect that the end of cycle wave 5 is an absolute bare minimum 4 months away, and quite likely a lot longer than that. It could be even a couple of years away. I was initially looking for this October 2018 as a possible end to cycle 5. I now think that's probably too soon. I think October 2019 now might be the next expectation. At this stage it looks extremely likely that intermediate 4 is complete, but if it were to continue it can't move into wave 1 price territory below 2193.81. When we have a new all-time high from price, I'll probably move the invalidation point up here to the start of intermediate 5. Okay, let's take a look now at the daily chart level, where the end of intermediate 4 is this low down here. So here's the triangle for intermediate 4. It meets all Elliott Wave rules. It looks like a really good triangle, and we've got a really clear upward breakout this week. A zigzag for A and B, a double zigzag for C, a single zigzag for D, and a single zigzag for E, falling reasonably short of the AC trend line, which is the most common point for E waves to end. We've got a nice long lower wick here, a good strong green candlestick, a little bit of resistance at the upper edge of the triangle trend line or around about that point, a breakaway gap here, a measuring gap here possibly, and now a break above or a close above resistance of this trend line. This is the upper edge of the classic triangle pattern. So we've had closes above both the Elliott Wave triangle and a classic triangle pattern toward the end of this week. The target is for intermediate 5 to reach 1.618 times the length of intermediate wave 1, because were intermediate 5 to only reach equality in length with 1, it would not move above the end of 3, it would be truncated, so we shouldn't expect a truncation. That's got a low probability. So I'm using the next Fibonacci ratio in the sequence to calculate a target for it at 2922. Within intermediate wave 5, no second wave correction may move beyond its start below 2594.62. Let's take a look at some classic analysis now at the weekly chart level. Here's a big symmetrical triangle pattern. Here's the base, here's the cradle. The breakout has happened prior to the most common point, 73 to 75% of the triangle length. We've got a close this week above the upper edge of the triangle trend line, and so we've got an upward breakout. It doesn't have good support from volume though, but in current market conditions, that's not too great a concern. Price has been rising now for years on light and declining volume, and it could certainly continue to do so for some time yet. On balance volume is constrained. We've got a bounce up from support this week. That's a bullish signal. At the weekly chart level, if on balance volume were to make a new all-time high, that would be a very bullish signal. Prior to that, if we get a break above resistance, that would also be a bullish signal. RSI is neutral. There is again plenty of room for price to rise or fall. ADX is still declining, telling us the market is not yet in a clear trend. It is a lagging indicator. This big triangle correction has been able to bring RSI down from extremely overbought and ADX down from very extreme for an upward trend. There is again room for a trend to develop. MACD still bearish. It is again a lagging indicator. What about the short-term picture at the daily chart level? We've got two full daily candlesticks closing above and sitting above the upper edge of the classic triangle pattern. I'm classifying this, until proven otherwise, as a measuring gap, so using the flagpole length from this low to the gap and applying it to the low of this candlestick gives us a target of about 2811. So that's a short-term target using that measuring gap. The longer-term target is taken the length of the base from the first apex of the triangle to this low down here, which is I think just over 340 points, and added to the breakout point. And that target calculation using that measured rule gives us a target at 3044 for the resulting move out of the triangle, and now we've got an upward breakout from it. For the last few days, price has been rising on slightly declining volume. Normally that would be a cause for concern, but as we keep noticing, this has been happening now for years at all time frames, and yet price just continues to drift on higher, mostly due to a lack of resistance ahead. It could certainly continue to do that for quite some time in current market conditions. ADX is declining. The positive DX line has now crossed above the negative, telling us we may have a potential trend change to upward, but as yet ADX is not telling us we have a clear trend. That's okay, it's a lagging indicator. ATR still declining. That also has been a feature of this market, low, light and declining ATR while price continues higher. We have a very, very bullish signal from on balance volume this week, and it's this signal I'm going to give the most weight to. We've got a new all-time high from on balance volume. That's extremely bullish. We would expect price very likely to follow through with new all-time highs as well. On balance volume also gives a bullish signal with a break above this resistance line. This line has somewhat of a slope, but it's fairly long held, and it was tested 4 times prior to the break above it, and so that is a reasonable bullish signal. RSI is neutral, still room for price to rise or fall. Stochastics now in overbought territory. That's okay. This one can remain extreme for quite long periods of time when the S&P has a good bull trend. Only when it's been overbought for quite some time and then exhibits clear and strong divergence with price would it be telling us to look out for an end to upward movement and a deeper pullback or more time-consuming consolidation. That is absolutely not the case here yet. There's plenty of room for this trend to run. And MACD is bullish. Bollinger Bands tightly contracted, maybe starting to show some widening. Normal at the beginning of a trend. Inverted VIX gives us a new high above these prior highs, but price hasn't quite managed to get there yet. If we read inverted VIX in the same way I'm reading on balance volume in the AD line as a leading indicator, this is a bullish divergence. So we've got a bullish signal from inverted VIX, and this week very strong new all-time highs from the AD line as it moves strongly higher. Expect price to follow through. This, along with the all-time high from on-balance volume at the daily chart level, is a very, very bullish signal, and it's those two which give me such confidence in this Elliott wave analysis and, overall, this analysis for the S&P. That's all from me this week with your S&P analysis, and I hope all our members are having an absolutely fabulous weekend.